that channel, we actually had a few stocks that we were looking at before the market opened, right? So let's look at those 5 stocks. All right, the 5 stocks that we're looking at here. Let me see here. It's going to be first JXIN. Everybody go to JXIN. All right, so this is basically a simple setup that one of our mentors, Oliver Velez, teaches us, and we're gonna look at an event that JXIN had early in the morning. All right, so this is a 24-hour chart. So this thing, for whatever reason, which was probably news. Let's see what happens here. It definitely had some news. It pops from $9 and squeezes all the way up to $19 and some change. All right, let's just say an average of 17. And the volume was over 300,000. And that was 5 in the morning. And then it decides to gap back down and come back to the 20. This is the 20 moving average period right here, the gold line, and the purple line is the 200 moving period average. Every 200 candlesticks is this line, and every 20 candlesticks is this gold line in counting. So usually our mentors teach us that anytime you have the 20 and the 200 tight together, and you have, who's echoing? I'm getting a double return. All right, anytime you have these 2 moving averages on a chart and you get an explosive move, you have an opportunity where this move can continue for a quite good while, but you want to go long. You just want to go long. Once you get an explosive move, you got probably, this is a 5-minute chart. You got 5 minutes to get in this trade. At what time in the morning? 5 in the morning. Anywhere from 5 to 5:30, this event happened. So this event happened about 5:15 to 5:30. Let's open this up a little more. So if you was up that early, you can get in this stock probably maybe 12 or 14. And from 14, you squeezed up to 16, 17, $18. You can get out of that trade that fast because it's moving so fast. Anytime you get in a position and you get a dollar, any 50 cents, a dollar, and it happens very fast, you want to take profits very fast. So since the ticker's moving fast, your expectation should be fast. All right. So now it slides around all the way to 7 o'clock. Okay. For anywhere from 14 to 16, another high of 18, it double taps. So here we have a price zone. We have a price zone where it responded to this price of $18, okay? And then it got back to $18 and it responded 2 more times and it got rejected. So it started to sell off. And you can watch the volume here. The volume tapered, but more volume came in right here on this candle. You see that candle? More volume came in, about 500,000, no, what's that, 48,000 shares to the downside, okay? Now this yellow candle is a red candle, but it's just yellow because it's indicating we are in pre-market. So it's coming back down to the 20. This is a candle, if you were still long here, to say get out. This is also a candle right here if you were long. Once you got a tall body wick, you got a rejection from a price zone, you want to stop out. If you were long, or if you took your trade up here. If you took a trade up here and it went like this and came back down, just stop out. Because a tall wick rejection is indication that there is resistance or shares up there that people are selling. So this thing comes back down. So it comes around and shakes around for about 2 hours and it gets a rejection back to the 20 and it goes under the 20. Notice how this ticker tucks neatly under the 20 from 1522, it shoots down to $14. We're talking about $1.25 price movement in 5 minutes, okay? And then it hangs out, guess what? Under the 20, all the way to the bell. So this happened at 7 o'clock, 7:10, all the way to the bell. It stays under the 20 period moving average. So what happens? When stocks get away from the 20 and the 200, when it goes away from these 2 moving averages, they tend to come back down and magnet. Unless there's more buyers and more volume coming in, these stocks tend to come back down to these moving averages. So what we're looking for. So we're going to tighten this chart up. This stock came from $9, okay? About $9 right there. That's $9.31. And so about as soon as the bell rings, what happens? What do? We wait for stocks that come to the bell so everybody can trade them. So we want to judge what happens at 9:30. That's what we're looking for. So right now, somebody could have made money longer if they were sitting there at 4 a.m. at 5 a.m., but most of us are not staying there at 5 a.m. We waiting for the 9:30 bell. So the 9:30 bell opens up. The stock opens up right here at 9:30 at 12.69, and it goes to a high of 13.78. So in this interval, you could have literally went long at 12.84, or let me see here, at 12.91, or for the break of 13, and literally it squeezed up, and you would have got a 50-cent move. You could have got a 50-cent move in less than 5 minutes, and you could have had your day's pay. So, but what happens? It goes to a high of 13.79. Okay, this candle, but no, it goes to a high of 13.80, and then it gets rejected. So this tall wick is usually a sign of resistance. It gets rejected off of the 20 moving average. And then what happens? The next 5 minutes, it gets a strong red candle going down. So we go from 13.70 all the way down to the tippy top of 12.55. So that's very aggressive. And that's an aggressive amount of volume here. See this volume? That's over 160,000 shares to the downside. So this is a nice indication of a color change. The stock opens up, it goes green, and then the next 5 minutes it goes red, and this candle takes out the preceding candle in red. This right here is an indication. This is the first indication that we might be going. This is an indication that we might be going lower, that there's resistance off the 20, and we should be getting ready to take a short position. Once this candle breaks the bottom of this, we should be taking a short position right here, 12.85. Break at 13, looking for a short position, 12.85, we enter, and then it takes out this candle. This candle never gets tested. It keeps going lower. So from 12.85, the next 10 minutes, the next 5 minutes, it goes from 12, it opens at 12.69 and goes to a low of 11.71. Right there, 11.71. So from 12.85 to 11.71, we're talking about a dollar move in 10 minutes. So if you got 100 shares, that's $100 you'll have in 10 minutes, and you can go home. And this is a technical setup. We wait for a strong bar. We wait for a confirmation of what direction, what trend, what's the trend happening? What's the trend here? We look for a trend. So at first the stock at 4 and 5 in the morning, it woke up and went high to $18 and change from $9. And then it chops around and now it's starting to fade. So what's the trend? Fade. Fade in the pre-market, fade in the pre-market. Then it pops up a little bit at the bell at 9:30. Then it gets what? It gets rejection. It gets people selling more shares. And then guess what? People sold more shares, over 200,000 in the next candle. So you can literally stay because this candle never tested that candle. This candle never tested that candle. This candle never tested that candle. This candle, it tests this one a little bit, but it makes a lower low. And then here is where we consolidate. So it's coming back down to the 200. So right around here, we get a green candle finally. 1, 2, 3, 4, 5 candles red. So that's 5 minutes of holding a stock on a 12.85 an entry. And we could literally hold it all the way down here to 11.38. And right now we get a strong body green candle taking out the preceding candle where we could stop out maybe at 12, okay? Or right here, we could stop out right there, 11, under 12 bucks from where? From 12.85. So that's a pretty good trade. And in about 30 minutes, you could hold that trade and you're done for the day. You should be done. So this is another thing that once these bands come back together, there's not much more meat in the bone. So it consolidates. This price zone from 12 to 10, this is called consolidation. the trade is over. You can stick around if you like, but why work that hard? So by 10 o'clock, see, here's 10 o'clock, you're done for the day, okay? That's what is that? JXIN. That was the #1 gapper in the pre-market. And it actually gapped up in the pre-market to go long, but because of the condition of what happened at the bell, it wound up going lower. The second one was GTT. Let's go to GTT. This is GTT, okay? Now GTT actually got moving yesterday, and it got some news, whatever the news is, and this is a 5-minute chart. So yesterday it got some news mid-afternoon about 1 o'clock, and it was around 171. So GTT starts to move. From 171, it cooks up to 250, which is a strong candle and strong volume coming in. It hits $2, it shakes out a little bit, and it keeps moving. So right now, this is a long indication. Again, 200 moving period average, 20 period moving average. And when you get a strong candle, more than 50 cents, so what is this, 169? Once you get to $2, it looked like it might be strong for an entry. So these candles are pretty good price movement for a penny stock. So if you would have went long at 2, you got here resumption at 1. See, you got about 190, it stalls out and it turns around. So that's a 10-cent move. So you can stay in the trade for maybe 20 cents, 30 cents before you stop out. So you can go long with 100 shares and maybe risk $30. But after that $2, it keeps going with more volume comes in, and it smokes up from 2 to 250 very fast. And those are 2 5-minute candles. And this was yesterday. So, and it just trends for the rest of the day on the 20. You notice this when it starts, it cools off and it bounces where? Off the 20 moving average period, the 20 period moving average. The 20, it bounces, it comes back down. Guess what? It goes under the 20, but guess what? It goes back above the 20, and it rises to 20 all the way into the close, up to $3. Okay. So now today, GTT opens up early in the morning at 4 at $3, and it smokes all the way up to 450. Okay, that's 1, 2, 3, 4 candles. That's 4 5-minute candles that it goes from it goes $1.50 in 20 minutes. It goes that fast. After that, it cools off. It settles down around $4. Now keep this target in mind. It goes to 450 exactly, and it gets rejected. That's a topping tail candle wick. So that's rejection candle. That's what I call a rejection candle, and prepare for a reversal. So we want to keep that 450 number in our head for some reason. All right. And that's 4:30 in the morning. So it settles down. So we're waiting for 9:30. We're waiting for 9:30, right? Let's go to 9:30. 9:30 comes, 9:30 is right here. The stock settles all the way from 450 back down to what? 320 right here. So the stock opens up and it's choppy. Nothing happens, and then we get an event. What's an event? When we get a rapid change in price. That's aggressive. So we get about 335 all the way up to 374. So anytime I get a price change of more than 30 or 50 cents, I like to say this might be good for, it has strength, and it might be good for a long. So it pops real fast. It comes back down, but guess what? The next candle is showing a lot of volume coming in, over 8 million shares coming in, and the scanners is ringing like crazy. Okay, so that's at, what time is that at? When we get the real confirmation is, we get a strong wick, and then around 9:45, we get a strong candle that moves from 344 to 385. Right there, I would have been long. Actually, Justin, was you in the stock, GTT?
Yes, I was. Took a position at 3. Go on.
What you took a position at where?
Took a position long at $3.63.
Right.
Covered at
where?
Covered at 420 because I don't want to linger too much in the small account.
All right, good. So Justin took a position at 362. Look at that. His timing, Justin's timing was perfect. He was watching this ticker for a minute, and he was asking me, and he literally, this is where he took the position right here. So he watched this, he probably seen that pop, it settled down, and he went in, he said, all right, we got strength coming in, volume coming in. So we're gauging volume, rising volume, higher than the previous volume, 1, 2, 3. And the candle is making a higher high. So this is, he took his position here halfway through this session. So he took a good bet. So as soon as he got in this position, he was never red. It keeps going up to 8. The next 5-minute candle, he goes from 8 to 385. It smokes up over $4 in 5 minutes. So he's at 407. So he makes the decision, I want to take my price at 420, right? So the next candle in 15 minutes, it squeezes up over 420, takes his profit. It winds up going to 440, gets knocked back down to $4. And then the next candle, a lot of volume comes in and it squeezes back from $4 to what is this? 475. It squeezes up to, okay? And then it gets what? Rejected. So remember that 450 we wanted to keep in mind in the pre-market? This is not too far off, right?
Not to mention it has option called.
Remember that 450? That 460? Look at this. Not too far off, right? Not too far off. Remember, we had a price change here when it hit this price, when it hit this zone. Same thing here, squeezed up with a lot of volume, but guess what? They turned the lights off and it dips all the way back down from 475 back down to 320. So here, there was a good spot because he looked left. This was a good technical setup to this thing got rejected up in this price zone and it went all the way back down to $3. And then right here, he took a long trade at the bell at 362, which was this candle was taking out all this consolidation and it was starting to break this previous zone here. Okay, so he's watching the volume and watching the candlesticks and saying this might be a good setup. And this is a good technical setup. 200 moving period average, 20 period moving average, and breaking above with a lot of volume. So you don't need to hang out a long time. That was a 15-minute trade. However many, if he had 1,000 shares, that would be, what was that? How much is that? That's about a 60-cent move. What was that? A 50-cent move, 60-cent move, or something like that. So that's $500 in 15 minutes. That's a pretty good trade. So right now, I would have been watching this for a short setup because I look left. This is also good for the long, but also when it got to this price zone, I'm looking to see if this continues to go higher or I'm waiting for a reversal. A reversal, apex reversal is what I call when a stock has finished and it takes out a previous zone. So I'm gonna change this chart from a 5-minute to a 15-minute. So let's look at the 15-minute. Now the 15-minute makes things real clear. These are two 15-minute candles. And here is the bell, 9:30, this candle here. So in 15 minutes, you get 334 to 383. So that's a long time. And then you get the next 15 minutes from the body of 384 to 407. And then the next, it goes a little higher, but then it gets rejected. So this 15-minute candle, it's got a tall wick. I call that a rejection candle when a price moves up rapidly, but gets rejected and it leaves a wick. So most of the trading happened here, but some of the trading happened up here. And then this candle, where it doesn't go higher than the highest of the high. And then this candle is where I'm looking at for a short setup. So I'm looking at here, 420. The bottom of this candle, see this candle, the bottom of this green candle is 420. This candle starts to take out this candle, I'm in. This is a 5-minute, this is a 15-minute reversal candle. This candle is taking out the previous zone of this candle. So this is a perfect setup for what? A short play, making a short money. It's away from the 200 and it's above the 20-period moving average. Okay, so now, and we got the candle, a red candle taking out a previous zone of the green candle. So right there at 420, I'm like, uh-oh, if it takes out the bottom of this candle, because I already got a signal that this wick, that somebody's selling right here, a lot of shares, okay, over 15 million shares. Look at that, over 15 million right there. Going to the downside, I'm with the shit. I'm gonna go short. And guess what? I enter my short play right here. This candle, the body never tests this candle or my position. And I give myself room, like 50-cent room, to see if it is going to turn around. Guess what? It never turns around. So the next, what, 15, 30, 45, an hour, another hour and a half, I could sit there and let my short work at 420 all the way down to where? 320. So I could get $1 move. By the time then it turns around, it dips lower, but it actually pulls back up real fast and goes to 334. That's where I stop out and cut all my shares. But at the 50 and the whole dollar, I like to take some profit. So each either 30 cents, 50 cents, depending on the price and how fast the ticker is moving, I like to lock in profits just as a measure. Just lock in the money. I'm not expecting anything to go to the moon. This is just day trading tactics. You get in, you get your price, you at least take half or the whole thing based on how the move is. You just got to have these tactics in your repertoire. So this is an hour and a half going down, and the rest is, this is consolidation. I don't need to trade this anymore. I'm done, I'm out of here. So Justin had a good long off this trade. I had a good short off this trade actually at that 420 and ran back down to $3. Pretty good. Let's go through some more tickers. AMC, let's pull that one up. What happened with AMC? Okay, so AMC is warming up. As you can see, I'm trading it left and right in this other position. And AMC is warming up literally from volume. The last few days, the volume starts to increase here. Okay, that's the 524. Then the next day, the volume is really picking up. Okay, so we're seeing it warm up. Then the next day, the volume is growing. Then it dips a little bit. Then the volume gets more crazy. So here's the crazy day. When it skips, it went from 18, what is that day? It went from 18 to 29 and some change, all right? From $18 to $29. That's about $10 in one day. And that's huge. And it actually continues with more volume coming in, and it squeezes up to a high of what, $35, 36, what is this one? 36 and some change. And then it fades and goes back down to $25. So AMC has been on this 200 period moving average above ride. So here it is. Here's another indication. Okay, you got the 20 period moving average in purple, and I'm sorry, the 20 period moving average in gold, and the 200 period moving average in purple. And soon as when these two are close and you get an apexing candle going long or short, that's an indication for a trend to break out. So we want this trade. We want this trade. It stays above the 20 all that day, dips it below a little bit, but it breaks back the next day above the 20 again. And guess what happens? It trends above the 20. Look at this. Look at this. This is a trend above the 20. So we want this because it's holding trend. Guess what it's doing? The next day, it trends some more above the 20. It dips back below. And guess what? The next day, guess what happens again? It trends above the 20 again. So this is a strong stock to show you that these moving averages mean something, because we definitely are trading algos. Like, this is not just retail traders. These machines are driving the stock and several other stocks, and they trade with these rules. So we want to have these on our chart as far as our tools is concerned, so we can actually make a proper trade decision, because you don't want to think too much. You're either going to go long or you're going to go short. So when you enter a position, you don't think, you just pushing buttons. If this happens, I'm going to do this. If I see the 20 and the 200, if I see the 20 and the 200 together and I see one of these candles, I'm going to go long. I see a strong candle from 18 go up to 20 and $2 in 15 minutes, I'm going long. If you did that and got in at 20, the next, you would have got out at 23. That's the $3 move from one candle indication off of a technical setup. You're done for the day. You don't need to trade no more. Pick one ticker. It has an event that triggers you to actually take a position. You take your position and you have your rules in case it goes back under the 20 or it takes out a previous candle going lower, you stop out immediately. Don't hold it and hope, oh, if it's going to go to 16 or 14, it might come back. It might, but guess what? You need to stop out. So if once you go long, you're waiting for a higher high. And once it makes a higher high fast, take profit. And I like taking profit in whole dollar numbers, 50-cent numbers, if not higher. And it makes a huge move. You could have held it and it goes up, it squeezes up to 28, damn near $30, $29. So this was a great play, technically. Now, guess what? Let's keep looking at it. All week, this thing is on fire. So it keeps cooking. It goes over 30, goes over 37. It comes back down, it gets hit. So here it is. Let's look at this day. What's this? This is the 28th. So let's look at this. So here's a stock that's been going for several days. And now I'm waiting to short it.
What happened?
What happened to him?
I don't know.
I think the aliens got him.
Uh-oh.
Juice, take the lead. Explain.
I wasn't paying attention. I was drinking rum. But
God,
I was with him, but I was drinking rum and Red Bull. At this point, if anybody wants to go to the bathroom or get something to drink, we're gonna take a brief intermission. We're having technical difficulties.
Yeah, I got a quick question. He was talking about moving averages, right? Do you do the exponential or the regular moving average?
Regular moving average.
So you don't fuck with the EMA?
I mean, you know what it is not, you don't, when you're trading, you don't want to be all over the place. Like, you could have a style, I could have a style, Nora could have a style, Kim could have a style, Jerm could have a style, Dwayne could have a style. And none of us is wrong. And all of us is doing different things. So whatever you work with and whatever you're comfortable with is going to work. If you're a momentum trader, whatever style you choose.
Okay, sorry about that.
It's going to work.
Sorry about that.
They were saying that the aliens got you.
Yeah, my Verizon went out and I had to plug it into my Xfinity. The lights actually went out and went on. You have the screen back, guys.
Yes, they told me to take over, Ali, but not for nothing. I was drinking rum punch, so I remember.
I ain't mad at you. All right, let's go back to it. Y'all got the screen? You see this?
We can see you right back where you was.
Yep.
All right, cool. This candle right here, okay, that was on the 28th. This is a rejection candle, a tall body wick, price, rapid change in price from where here? $30 all the way up to $36, and it gets rejected. That's in 15 minutes. So it's getting traffic. I love 15-minute reversals. As soon as I see a green candle making a lower high, this is the high, this is a lower high, and this is a red candle taking out what? The previous candle right here. Right here, I'm looking for a short, $32.61. I'm in. Guess what? In the next 30 minutes, I go down to $28, I can leave. So from 32 to 28, that's $4. That's 4 points. This is a 15-minute apexing reversal short setup candle. I love these. A red candle taking out a previous candle. Now let's look at the previous day. Let's look at this one. This one does it. A rapid change in price. It got an apexing candle, but guess what? this candle catches the fade, but then it turns around. So you got to stop out because it's claiming the previous zone. So you got to leave. Now it shakes out a little bit here, but this is not ideal. You want to stop out. So you can try here. Maybe you could get ready to try here, but these are not it. But these candles are perfect. After the stock has been running a while, you still just hawk it. This is why we want to stop out and not try to hold trades, because this is, we're going to get an opportunity every day, whether to go long or go short. So this candle is telling you, hey, this is going to work today. You got a tall body wick here, rejected. This candle doesn't make a higher high, it makes a lower high. This candle gets rejected too. And then it starts to go red and take out the previous candle. And you got a couple of minutes, in this case, 30 minutes, to get your money. And you do get your money. You get $4 move and you're done. If you hang out, it goes back up from what? 28, it skips up and stalls at 31 a couple of times, and then reverses and makes a lower move at 26. So you would have had $2 more in the bank if you would have played this zone as well. So this strategy of working the 200 period moving average and the 20 period moving average works well. So let's skip all the way to, what's today? Today's the 3rd. Let's skip all the way to today. So here's today. This thing opens up at $75. This is 5 in the morning. This thing squeezed all the way up to what? What's this? $77 and some change. Lord Jesus, who's up that early? Juice is up that early. All right, so it's consolidating though. And what happens in the pre-market early? $75, the shit flies down to $55. What do you think happened right there? What the fuck was that? Now this is a red candle. These are red candles because I only got it in yellow because it's pre-market. But this is going to be an indication of what's going to happen for today. I love seeing this. It consolidates around 60. And then by 9:30, we were looking to see what happens. So what did the stock do? Remember I told you when it's riding above the 20 and it keeps bouncing up the 20, keep going long. But as soon as it breaks below the 20 period moving average in the pre-market, this is an indication, this is a zone. All right, let's keep track of that price, 75, 70. It broke below 70. Let's watch that 70 zone right here. Let's just draw, let's put a drawing in there. Let's put a horizontal line at 70. Let's do that. Okay, matter of fact, let's put it right under that candle right here. Let's do that. Now look at this. This is a pre-market, anywhere from 5 o'clock in the morning to 9 o'clock, right? 9:30. So the bell hits, right now the stock is under the 20 period moving average. 9:30 bell rings, it stalls out, and guess what? It shoots, it taps 60. What is this? It taps 62 and flies down to 50. It did 10 points in 15 minutes. Then the next thing you know, I think this was a halt, and it opens up and goes from 50 and it flies down to what? $41. Then squeezes quickly back up to 47. And that's in 30 minutes. The first 30 minutes of the trader session gave us an indication that it was under the 20 and it might gravitate back to where? The 200 period moving average. And as soon as it touched the 200 period moving average and broke below, what happened? It bounced right back off of it and flew back up from 47 all the way up to a high of 57 at $10 in 15 minutes. It bounces off the 200 period moving average like clockwork. Do you guys see that?
Yes.
Yes. Can I ask a question?
No questions until the end. Dad, ask the question. I'm just kidding.
I was like, damn.
Cold-blooded. Colin Murphy. What's the deposit? Nah, go ahead.
Nah, I was just wondering. So, like the candles, not the candlesticks itself, but the wicks. That is one of the things that we want to be paying attention to see how everything is moving with a stop.
It's not that important. It's just, it's history. It means the price traded up there, but not the okay, these are 15-minute candles. Most of the trading happened in the body of the candle, okay? This is the body. This is a solid body. The wick is indication that the price reached this level, but not a lot of trading happened here. So actually, let me explain that better. This body, the bottom and the top, from the interval of the time frame, it opens, okay? The body is the open and close of the candle of this 15 minutes. So in 15 minutes, this is the bottom. So let me give it to you here. The open of that candle is, what is that? 40. It opens at 47.13, which is 47.13, around there. Okay, that's the open. That's the body. That's the, now the high of this candle, it closes at 54. So 54.85. So that's the body, but the price during that time frame, it reached lower and higher. Okay, that's what the wick indicates.
Okay.
So the main time frame for 15 minutes is this section here, but in between that time, other price exchange happened. But when that happens, we usually we usually notice momentum changing at whole dollar numbers and also round numbers on the clock. That's why we're using these chart patterns. We're using 15-minute chart patterns. We're using 5-minute. Let me turn the 5-minute on. So the 5-minute at that same interval today is, let's see here. What time was that? At the bell. This is the 5-minute chart, all right, at the bell. So at 9:30, what's happening here? This is a 5-minute chart, but this is the 200 period moving average, and this is the 20 period moving average in gold. It pops up and it gets rejected back, meaning the 200 and the 20 became resistance, and it pushes down. And these guys were also selling. There was an offering on AMC today. That's why it went down so aggressively, so fast, and changed price. What is this? 60 down to 45 or lower? That's insane. Okay, in this amount of time. This is 15 minutes. So you mean to tell me you can't make no money in 15 minutes? Then it reverses, because when things rapidly drop that fast, usually there has to be some covering. So it actually pushes back up. Huh?
That's what they call a dead cat bounce.
A dead cat bounce. Thank you. And so it bounces a little bit, and this ain't a little bit bounce. For this stock is a little bit, but this is a big bounce. But it bounces, but it goes to the 20 period moving average, which is now under the 200. So now this stock is heavy at the top, meaning there's going to be a lot more supply than demand. And it dips even lower, all the way under 40 bucks for the next, all the way up until 11.15 right here. And then it turns around and it's then it gravitates back to the 20. Then finally strong volume comes in around 1 o'clock and it starts to boost back up. So this candle right here is saying, I'm breaking this consolidation trend. I'm breaking back above the 20, and I want to claim the 200 as well. So in the next 10 minutes, it does. It claims the 200, breaks back below, but then it squeezes back up because we have more volume coming in, stronger volume. After this volume faded, that volume faded. You have stronger volume coming back in, 10 million shares per 5 minutes. 10 million, 10 million, 10 million, 10 million, 10 million, 10 million. In 5 minutes, that's strong volume. And it bursts back up to where? Exactly at the price of the pre-market pivot of, what is this? 67, something like that. Let's go back and look at it again. Look at this. When it broke below the 20, and here it is where I drew my line. So right there is where it's like, all right, this thing, this is the candle that started it all, the trouble. And sure enough, as long as this one, it stays under this, it came right back to that zone. I would have been looking to short it there because I looked left. I said, all right, I got another opportunity. It's above the 200, it's above the 20. And this is a previous zone where it responded to that price and got rejected. And guess what? It got rejected from all the way up there, 68, 69, all the way back down into the close to 50. So we're talking about more than $15 move, going back down to the downside, back to the 220, back to the 200 and under it, and it slides. This is a great technical setup for going long and going short. And we got to use these. We got to use these moving averages and these tools so we can say, all right, what ticker am I trading today? What's hot? Let me look at it. Is these moving average periods, the location, good for me to take a long or good for me to take a short? Some of these, some people that wanted to go long on AMC today, they didn't do this. Hey, I see this thing has been going all week. Oh, wait a minute, but it broke under the 20. And in the pre-market, it broke under the 200 and it consolidated. I'm still going to go long at the bell. So those who went long at the bell, they would have brought this breakout, this quick breakout out here from at 9:30. They would have brought that at 60, maybe 61, or 58. And guess what happens? They got strong rejection and it broke down under 45. They probably had to stop out. They could have blew up their account. They're losing money and they panicking because they didn't look at this setup and wait for an event to happen. Me, I would have been waiting for this event. This candle, I'm waiting for this candle to take out this zone right here, or these two moving averages are intersecting. And this is an opportunity to see what it does. Usually there has to be divergence. When these two moving averages are close together and there's a lot of volume, it has to be divergence. Divergence is either going up strong or going down strong. And it happens. It goes down very strong, diverging well below the 200 and the 20. Yes.
It would it be safe to say, like, when you get a divergence, when they start to cross paths, is it safe to say whatever direction it pulls off in very hard, that's the way it's going to go? Or we can't say that yet.
There's not an absolute rule to anything.
Right.
But what we have is usually the 200 is lower because it's a lower moving average and the 20 is a higher one. So anytime you have a descending 20, look out. You're looking for the stock to make a lower move. Okay. Because the descending means trend change. And the higher moving average is usually the one that tells you where the trend is going, if it's changing trend and changing direction. So if this stock stayed above the 20, I would have said, hey guys, get ready to go long. It looked like it might continue above the 20. It's not absolute rule, but more cases, statistics say anything moving above the 20 and the 200 in trend continues in trend until it breaks trend, which it did in the pre-market. It broke trend. Why? Let's look at this, back us up for a few days. Let's tighten this chart up. Let's look at it. Let's see if we're making sense. So here we are. All right, that data is too tight. Let me go get a 15-minute. And let's look at several days. So here's the 200, right? It didn't break below the 200 yet until what? Today. Today was the day. Look at that. It broke the 200. It broke through it. Okay. And here's the 20. And the stock is doing what? Riding the 20. It broke below, but then it claimed back up. Get back in. Riding the 20, back above. Get out. It's coming near the 20. Is it going to cross? No. It keeps going. Get in. Go long. It goes back below. It broke below. Get out. It goes low. See, look at this. A reversal this day. Okay, it reverses. Okay, that's a 15-minute reversal candle. And you got enough time to make a little money. And that's it. Get out. This is consolidation. Get out. Guess what? It's under the 20. See that? It went up, and then these candles broke below the 20 period moving average. Trend change. What did the trend do for the rest of the day? It stayed under the 20, and that was true confirmation right here. So, well, what was the price change? $35 to where? $30. You have $5 to make a decision. So it breaks the trend and stays under the 20. Guess what? It goes back above the 20 and the pre-market. And that day it pushes above the 20, goes back below the 20, but quickly reclaims during the day. And it rides the 20. Then it pushes in the aftermarket. Then it pushes in the pre-market. And that's all above the 20. Here we got a reversal. Here, we got a reversal here. This is a 15-minute reversal. It's breaking this zone. You could short it here, but you can't even get no shares that early. So from here, what is that? $42 down to 38. You could have made a little coin at the bell. But at the bell, what happens? it goes low to 35, but then it squeezes back up. It claims back up. So this is why you don't want to stay with the trend, because this candle is telling you, we got a lot of volume coming in here, and we might want to have this thing go back up. This candle right here. And then this candle's confirmation. It breaks, it squeezes back above the 20. And guess what? It rides the 20 all day, staying above, staying above. As soon as it hits the 20 in the aftermarket, boing, into the next day, all the way up until today. And then today is when it broke the 20, aggressively, a strong candle, a strong body candle. From where? 73 to 68, okay? And then it breaks lower. Now we got strong confirmation of trend change. Look at it, you see it. Look at the 20, what is the 20 doing? Oh my God, it shows over. 20 is now rapidly falling because of these candles. This was strong indication of trend change off the 20. So what do? We wait for that. We look at it at the bell. What happens at the bell? 9:30, right off the 20, literally on a 15-minute chart, 62, right here, the 20 period moving average, damn near exactly off the 20 on a 15-minute chart, it rejects from 62 straight down to 50 short. As simple as that. Rejection and straight into trend change. These are simple tactics. Now, every whole dollar, or maybe based on the speed of this candle, I would have stayed in this thing, because you would have seen that, all right, they're selling at the bell. They're selling a lot of shares at the bell. Let me see how far this goes. And you would have definitely got your $10 move, maybe a little more, a $5 move. That's a great day. That's great price point for an entry on a setup that's technical. And you can get out. You don't need to do anything for the rest of the day. This was a great trade. Any questions? Going on to the next ticker. All right, next ticker. All right, here's KOSS. KOSS is in tandem with the same thing. Look at this. KOSS. Same thing, in tandem with the main stocks. It's been doing the same thing. It almost mirrors the exact same shit of AMC. And those meme stocks are all doing the same thing. GME is all as well. I could pull the same chart up. It's the same thing. Same explanation. You get a body candle, strong burst of volume coming in off the 20, above the 220, a lot of volume, strong body candle. What is this one here? 27 up to 28. Then you get continuation up to 32. Nice trade. Guess what? It tapers off a little bit, but then it keeps pushing off the 20. Flies up to $44, $43. Oh my God. End of the day, you have a great day. Guess what? Trend change today in the pre-market. 5 a.m. It's cooling off. It's cooling off. What happens? It breaks below the 20 period moving average in gold. And then it stays under. And then it tests what? The 20 at the bell. This is at the bell right here. Exactly at the 20 on a 15-minute chart. It pushes down, and it's selling from where? From 37 straight down to 31, okay? 6.7 point move in 15 minutes. Great trade. You can hold it a little bit, make a lower move. 28, incredible. You're done. It breaks below the 20. Once it comes back to the 200, it breaks under the 200. It bounces off the 200 here, but then it retests the 200 and breaks below. But guess what? It climbs back up because it wants to bounce off that 200 period moving average, which is a stronger moving average than the 20. Okay, there's more base down here, and it settles down and consolidates. You could take your trade-off route in. As soon as the closer it gets back here, I'm taking profit. I'm getting out of there. Simple, Simon.
Quick question, please.
Yes.
So to your left, that big red candle.
This one. Off the bell?
Yeah. So get on the trade. I understand under the 20, that yellow line. Or should I let it start taking out that green a little bit and get on at the bottom of that green right there?
That's what you would do. You would definitely.
If you're going short or if you're going long?
Short. I know I'm supposed to hop on at the end of that green, but since we were talking about being under the 20, I want to know if there's a little change to the rule a little bit.
It's you as far as I'm giving you just technical setups.
Yeah.
To look at how to identify what trend you want to take going long or going short. Your entry tactics are another thing. You can start early looking for this because we had this reversal of trend in the pre-market. This is saying, hey, we're going under the 20. Let me get ready for a short. And definitely at the bell, we have a rejection off the 20, which you can start getting ready to arm yourself. But yeah, you can actually, I love when a candle begins to take out a previous candle zone and I can take a position. That's an entry tactic. Okay. And that's another thing that we'll discuss. But right now, we're just looking at what is the best scenario for a long setup? What's the best scenario for a short setup? And the 15-minute chart for the short reversals are great. I think the 5-minute charts for the long setups are great, as long as you have the 20 and the 200 and watching that location of when you enter that trade. All right. Let's go on some more. KOSS, no, EXPR. EXPR. Let's look at this one. All right, same scenario. This damn near looks like the same. This is a meme stock. It's pushing, backs off, push, breaks below the 20. You got a short from 550 to 450, maybe $4. It breaks the 20 and the 200. They intersect, and then guess what? It breaks back above. They cross sections again. It's riding above the 20 and the 200 again. It bounces off the 200. It bounces off the 20. It springs up from $5, shoots up to $6.50 yesterday. And this is a meme stock following the same formula as AMC. Same formula. Same formula. Okay, let's open this up. Today's the day. Today's session, it cooks up, goes to $8 in the pre-market. And guess what? Red candles, well, yellow candles, but for pre-market it's red, it's yellow. And guess what? It breaks below the 20. So I'm looking at it like, uh-oh, this might be one of those days. But guess what? It gives up the whole move in the pre-market. So it's hitting the 200. So what happens at the bell? You get a lot of volume, but you don't get no range. 550 down to 515. And it consolidates the whole day. So is this a trade? No. Because we already came all the way back down to the 200, and how much range we're going to get out of low price stock like this? Not much. So you can make 20 cents, 30 cents, but it's on the 200 period moving average, and it's kind of bouncing off of it. It's playing with it. It went under. Okay, finally we hit $5, but it's not really an ideal trade because in the pre-market it gives back the entire range and it doesn't retest where? The 20. 20. We needed this at 9:30 to test the 20, which would be up here at $6, and it would be a good short up here at 6, maybe 550, which it did. Put it right here, 566, and it rejects and makes a lower move to 5. So you could probably get 50 cents out of it, and you go home, which is a good trade. 100 shares or 200 shares, that's $50 or $100 in 5 minutes or 15 minutes. Let me say that 15 minutes. I think that's pretty good. Who can make a $50 to $100 in 15 minutes at their job? Juice can do it. Okay. He's probably stealing. But this is from these tools of the 20 and the 200 and judging the volume and trend change is what we need to do as traders. And we just need to trade one ticker. And if this one doesn't work, we move on to the next one. Let's move on to LEDS. Let's check this out. Now, let's just check LEDS out today. Now, 9:30. Yes.
Quick question. That moving average, doesn't it change with the time frame that you're on? So like the 1 minute, the 5 minute, the 15
Yes,
minutes?
it does. Yes, it does. I love 15 minutes and 5 minute time frames because it weeds out noise. I really love the 15 minutes because it weeds out a lot of noise. Like, let me go to 1 minute.
Well, yeah, show me the same chart on the 1 minute and see how.
Now, how do you read that? Hold on, let me back this up. Now, this is the 1 minute today. Okay, that's the 200 and that's the 20. Now you can follow this It's riding above, break below, but it claims back up, riding above, riding above, riding above. It touches the 20, riding above, riding above, riding above, riding above. What happens? Stalls out around $20. Guess what? Breaks below the 20, stays under the 20, stays under the 20, stays under the 20, run. You can understand it, right? You can see it. So it's the same rule. You got the 200 and the 20 together tight, and it has a strong move, a strong event. This is not exactly 9:30, but the volume comes in after 10 o'clock, around 10:15 or 10:05. You have all this volume coming in, and it's increasing. So you're not 9:30 here. 9:30 is dead. But right around here, oh, this hit the scans, leads, LEDs, LEDs. That's why we have the scans up for you guys, because you want to check what's going on with the ticker. Okay, a lot of volumes coming in. There was no volume before. Rapid change in price. Oh shit, look, the 200 and the 20s here, and they're close together, and it just got going. I might want to get long. Fuck, it's above the 20. Let me take 100 shares, just it. Let me just do 100 shares at 13. 13 keeps cooking up and goes to 14. Shit, that's $100. I might want to lock it in. I don't know, that shit was kind of strong. Let me hold it for a minute. All right, I'm gonna lock in half. 50 shares is off. It goes back to the 200. It never breaks this candle here. And it never breaks the 20, the 13 where you could stop out. So guess what? It bounces at 13.57 off the 20, and it keeps cooking. It keeps doing that all day. 14 keeps cooking, 15, 16. Then it breaks a little bit under here. Guess what? 16, 17. It keeps doing it. Keeps doing it. Doesn't really break the 20 moving period average until up here. 20 goes back down to 19, and then it aggressive candle and rapid price change. And this is 1 minute. And at 19, I would have ran. So you could have hold this trade based technically on moving averages and work this trade for a good amount of time. You would make some good coin on just 100 shares, even 50 shares left. If you would have took profit at $1, 50 shares from 15 or what's that, 13 to 19 or 18, 50 shares, 13, 14, 15, 16, 17, 18. That's what's that, 50 shares? That's what's that? That's that $200, $100, $150. That's good money.
Yeah.
And that's just technical, being technical. So this is what we don't do as traders. We usually look at the price, how much money we're looking at. As soon as we enter the trade, we worried about the money. Oh shit, the money. We should be watching the candlesticks and the volume and watching the moving averages and how is it behaving, and having trading tactics for exiting and taking profit or entries. Where is the location of this entry? Now, some people watch this shit all day and don't get in until up here. Yo, the shit's gonna break out again. It look like it's getting ready to break out, and it does a little bit of this, and then it does this to them, and then oh fuck, oh man, 16, oh man, 15. That's the ride out to the rest of the day, all the way to the close, to the 15, and you mad now because you got in at 20. Now you down here at 15 because you took too long, and guess what? You wasn't using these tools and these moving averages. Same thing. 1 minute is good, but let me look at the 5 minute and look at that. Look how strong it is above the 20 now. It's clean. You can read that. And this one would have scared the shit out of you. You see this? See this candle here? That candle there? You would have ran. You would have said, oh my God, let me get out of here. This looked like, and these wicks is looking like resistance. It hit the price, reject, hit the price, reject, hit the price, reject. And then here we got it. Somebody's like, you know what? I'm going to unload all this shit on your head. And they do. And then it breaks below the 20 period moving average and slides the rest of the day. Now, these are great long setup off the 220, great long. Wait for the short reversal. It's taking out these 3 candles. This one, perfect entry right here. You could have entered here, and then guess what? You get your move from here, 1840, down to 1670, 1660. Great trade. Could help you take most of your profit off. You let the rest shake out for the rest of the day. It makes a lower move to 15. Cover your profits. This is consolidation. Go home, have a great day. Go to the beach. play with the kids. And this thing's worked all day. You don't have to, you know, force trades or I need to make money. You're looking for a technical setup to enter a stock. Okay, let's move on. That's LEDS. All right, now it's today's session. WKHS. Let's back it up. WKHS was getting moving a little bit yesterday. Squeezed from 10 straight up to 14. Shook out. Now today's session, it lost momentum, broke under the 20, but then squeezed back above the 20 at where? The bell. Now look at this candle. This candle would have had a lot of people going long. It bounced all its volume, over 10 million shares in 5 minutes. The price went from $14 to $17 in 5 minutes. In 5 minutes. You think you can get in between that? Yes, you can. Let's go to the 2-minute chart. All right, we're going to the 2-minute chart. So at the bell, you got about a minute to make a decision. I'm not gonna lie. Why? Because at the bell, look what happens. A storm of volume comes in, a storm. This is 2 minutes right here. This candle's 2 minutes. $14, you might not have seen it. It would have definitely hit the scans at 15. You probably could pull a trigger at 16 because it's moving that fast. These are 2-minute candles. So you end the next candle, it dips back a little bit to 15.30 and it squeezes all the way back up to a high of, what's the high? 17.34. So you could have gotten here at a 16, got out of 17. That's why I say take your profits at $1, a whole dollar numbers of 50 cents based on the speed of the candle. If you get in fast and the stock is moving fast, you better take your profits fast. Now, sometimes we get in trades and it's moving slow. It's staying above the 200 and the 20 nice and easy. So you stay in longer. But this one is quickly changing price. I might want to lock half up. And then when it goes up here, I want to lock up another half. And when I get this, I get a rejection from 18 and change down to 17. I'm thinking about stopping out the rest. But that's why we need to have profit-taking measures because it's away from where? The 200 and it's away from where? The 20 aggressively. So then guess what? A ton of volume comes in to make it short. So this candle is taking out this candle. And this is a 2-minute chart, 2-minute chart, 2-minute candlesticks. So here's a rapid change in price, taking out a previous zone. I'm looking to get short probably here at 17. And guess what? In 2 minutes, in 17, I'm short. It flies down under 16 to 15 and some change to the low of 15.49. So we're talking about $1.50 and change in price from my entry, and I can make money in 2 minutes. So if it's 1,000 shares, that's $1,500 in 2 minutes. If it's 100 shares, that's $150 in 2 minutes. It comes back to the 20, and guess what it does? It bounces, boing, 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 and then here it's taking out the previous zone here, boing. So right here, 16 long, back almost to 17, not quite, but it does. And the next candle goes over 17. Get out, because these are wicks. The price is thin. And this, when we're trading stocks like this, we use a tool called the matrix right here. This matrix shows how many people selling and how many people's buying. And if it gets weak, or if we see a lot of people selling up here, we can get out the way and judge based on the candlestick and this matrix. If there's a lot of shares selling, or if it reached that price real high, real fast, let me just take profit or get out the way, because it tapped this price, but it's making a lower move. And now people are throwing shares at it. You can see those shares when they sell them here on this matrix tool. And that's why we use these tools, because we're trying to get in and get out and go home. So that's WKHS, that's workhorse, all right? And there was a lot of option calls in that, making that move. So let's move on. JXIN. Now this is a ticker that's been going for a couple of days. Let me put on the 5-minute chart. 5 minutes. And this scenario is going to repeat and repeat and repeat. All right, this stock gets going early in the morning. Nobody's up, except for me. This thing from $9, $9.34, the shit smokes all the way up to a high of $19.42 at 5 o'clock, 5:30 in the morning. Anybody up? No. Guess what? Rapid change in price, 5 minutes, 5 minutes, 5 minutes. And then it gets a rejection at this 19, straight back down to 17. Then it gets a rejection again, down to 13. And then it chops around. Then it pushes a little bit back up to 18. But guess what? 18, it rejects again, back under to where? The 20 period moving average. And then it breaks under. So now I'm looking at this thing. Oh man, I might need to go short. Why? Let's find out. Let's put the daily chart on. Here's a little history lesson. This stock is a new stock. And they've been selling it since $45 straight down to $20. And then the next day it went to an open of $17, went to a high of 19, and it went to a low of $8.76 in one day. So this stock already, even though it's new, is known for just popping and going down. The next day after that, it opens at 9.50, goes to a high of 10.90, and then goes to a new low of $7. Then it consolidates for a few days. So guess what? I know this ticker is doing this. It pops up from where? $9 up to 13 and some change. So I'm like, all right, I might be able to make some money today. Let me put the 5-minute chart on. Guess what I do? I'm watching it. It popped up, go to above the where? 220, pops up above, but rapidly gets rejected because people are selling. And guess what happens? It's under the 20. Let's watch the bell. The bell is the most important time frame we want, right? What happens at 9:30? 9:30, here it is. Here's 9:30, 100,000 shares. It pops up a little bit, goes above 1350, but then gets rejected with a tall wick. So now I'm not committed yet because it's resistance. 20 period moving average is its resistance now. So now I'm looking at it and it breaks below, back under the 20 period moving average at 13. Then it takes out the previous candle right here. This green candle and this going red. I'm looking to enter right here at $12, $12.85. I'm in. $12.85. This candle never tests this candle. This candle never tests this candle. This candle never tests this candle. This candle, all red candles for the next 1, 2, 3, 4, 5. That's 25 minutes. So at $12.85, I can get out around here because it's bouncing off 1150. So from $12.85 to 1150, I think that's a good short play, a damn good short play. Then it starts to bounce a little bit, comes to the 20, gets rejected, and sells off a little more and breaks under the 200. And you could take the rest of your shares off down there if you're trading it short. There's no long play here because what? It actually broke above the 20 and got rejected, and it moved lower aggressively with a lot of volume. That's an indication that the stock is going to trend what? Down. You see the 20 period moving average going down, aiming down, coming back to what? Pair up with the 200. And what it does when it pairs up with the 200, it settles down and consolidates. Look at that, guys. You see that? So you just got to reverse this when you want to go long. You want to see if the 20 and the 200, a great location for the 20 and the 200 to go long is when they were together and they just broke out. Imagine this in reverse. It just decided to break out and you see a trend happen and you're like, oh shit, I can go long now. This is a good location. It might just be getting started. Let's go to fun today's session. Did fun pop up or are we doing fun or no?
I didn't see fun do anything much.
No, fun is trash. All right, 10. This is the same scenario. Here we go, another scenario. This is at the bell. 5-minute chart, 10 came up on the scans. At the bell, it goes red. What is, you got the 200 and the 20 together. And then finally, about 10 o'clock, 10:15, we get a strong candle, 1827 up to 1857. So we're looking at a rapid change in price in 5 minutes, and it's above the 20 period moving average and above the 200. They were together, they were tight, and it's starting to expand. We want to go long. This is a long indication. So we can go long here at 1857. All right, You scared of it? Let's go long at 19. It finally skips up to 19, I'm long. It never goes red until 1975. That's 75 cents. You could stay in the trade, maybe take half, see what it does. It stays above the 20 period, and it keeps going all the way up to $21 and some change. You could have rolled this all day, all the way into the close, because it's still up there. So this is a great indication. These moving averages can guide us and help us be profitable. We need to use them. So we're looking at the chart more than anything versus the money. Most of us, we get in a position, we're trying to make money. We got our own thoughts and ideas, but we should not be thinking. The only thing we should be doing is pushing buttons and starting with small lot sizes. Let me see if this works. Let me put up one lot, 100 shares, and let it work. Oh, it's going. Let me put another lot. I'm in the money already. Oh, this is still going. Let me put another lot. This might work. And it continues and continues. All right, this looks like I got to take profit because it's stalling out up here. The trend doesn't break until right here. It takes out, you got a previous zone taken out, but it reclaims in 5 minutes. So, and it's staying above the 20 period moving average. It doesn't start breaking trend until it cools off and the volume dips, and then right around here, it gets near the 20, it starts to cool off. It pushes a little higher, but you don't need to stick around that long to find out. You know, you already got a winning trade, lock that profit in, and tomorrow's another day. So that's TEN. That was today. All right, MOSY. Is anything on MOSY? Same thing with MOSY today. Nothing happening at the bell. This is the bell. It dips actually. The 20 and the 200 is together. Guess what? The 20 is on top of, the 200 is on top of the 20. So it's really bad. It looked like this is going to go red. And actually, some people would have shorted this at the bell, but it's not enough volume. Okay, 200,000 shares at the, it's not here. What's the price? From 627 down to $5 and some change. And then it reverses. These take out that previous zone. You got to leave if you're short. Guess what? It squeezes up. A lot of volume comes in, 400,000. It squeezes up. It breaks above rapid change in price, $6.18 up to $6.52 or more. It consolidates. We got more volume coming in. Rapid change in price. Another indication to get long. Then you got the 200 and the 20 separating, and you got volume coming in. So here you got $7. I'm in. All the way up to 850 before it gets what? A reversal. This candle takes out this zone right here, and it chops around and finally goes lower at the end of the session to 750, under 750, and it breaks back below the 20 period moving average. And the rest of the day, that's it. It's over. Day's over. So you could have went short here, 850, $8, cover down to 750, 50-cent move on a short. And the long, you got at $7 all the way up to 850. That's a $1.50 move on a long play. And just based off technical setup off the 200 and the 20 and strong price change and strong body candles. This is a strong body candle. This is an elephant candle, strong body candle. This is an elephant candle, strong body candle, strong body candle. But when you got 1, 2, 3, you usually want to take profit when you get like 2 or 3 clicks. When you get candles like this, 2 or 3 of them back to back, you want to start locking in profits, because those strong candles usually they can't last forever. They don't. You want to have just profit taking measures. All right, that's MOSY, MOSY. SGLB, same thing. All right, damn near identical. All right, 220 around noon, 12:30, volume sneaks in. Not a lot though, not a lot of volume, 90,000 shares, 60,000 shares, 20,000 shares, but guess what? It's what? Above the 200, above the 20. And you got a strong rapid change in price, 383 up to 388. That's not a lot. That's actually small price action, but SGLB, the stock works. The same strategy works. All right. So here, 390, 385, I'm in. Squeezing up, 405, 415, maybe I'm looking to take profit right here. It's starting to stall out right here, 410, 415, and it does stall out. Guess what? It stalls out 415, 420, dips back to 405, I'm gone. It breaks up a little higher later, but I don't got time for that. It came back to the 20, time to keep it moving. I got in around 390 off of a quick indication, and you get out. This is a setup right here, consolidates, and it starts to catch a red move. Stop out, leave. 410, 390, 40, what is that, 20 cents? 20-cent move. There was a time we tried to get 10 cents, trying to learn how to trade. 10 cents is a lot of money. 100 shares, 10 cents is what, $10? In a few minutes? I'll take that. So let's go to ZOM. All right, 5-minute chart still. ZOM at the bell. Here it is, the same scenario. 200 period moving average, 20 period moving average. Strong, rapid change in price and a penny stock, ZOM. Okay, a lot of volume. Guess what? It gets going at 84 cents and it stays above the 20, all the way up into $1 for $1.06. Then it breaks back below into the 20 at $1. Leave from 84, 86 to 104 or $1. That's good money. That's good coin for a penny stock. Now you want to use bigger size to get good money, get good price, but 10 cent and a penny stock under $1 is damn good price range. 15 cent is damn good price range. But guess what? It's still following the same rule. Strong, rapid change in price for the size, for the ticker. This is aggressive. Because penny stocks, they're hard to move, especially under $1. So 10 cent, 20 cent is aggressive price changing for a penny stock. And you can go long in that. 1,000 shares in that at 10 cents, that's $100. Okay, and it would took you from 9:30 to 1 o'clock to get it, but you'll get it. Okay, that's ZOM. KIN, same deal. $5. Here we go. KIN, Ken. Here, 9:30. You got a burst in rapid change in price. You got a burst off the 200 and off the 20. Here you got 535 straight up to 554. So now I'm watching it. 560, I'm in. It keeps cooking. 580 keeps cooking. $6 keeps cooking. 620 consolidates a little bit. I might have ran here and took profit right here. From 620 to 640, I might have cut out or took half. Let me watch it. If it breaks back to the 20, I might take it all, or I'm gonna watch it to see if it makes a higher move. It finally does. Gets cooking, gets cooking, gets cooking, gets cooking, gets cooking, and finally, it gives me a tall body wick, and then it gives me a red candle and a red move, and I can leave at $7, 7 and some change. Have a great day. Comes back to the 20 and shakes out, consolidates, and then it dips. That's the end of the day. But the location of my entry at the bell, 9:30, 200, 20 period moving average, rapid change in price, a burst with a strong body green candle. Strong body. Here's a strong body, but here's a wick rejection. And then it reverses, but it recovers. Then we get another strong body. Strong body usually follows continuation. Strong body, and then it fails. And then it chips away, and then we get a strong body, meaning, we look like we might get a continuation. And then we do. Then it breaks that zone, keeps pushing. Higher, strong body. Higher, strong body. Strong body. That's a lot of continuation. So you had enough time to really make some good coin with one position. You could have added to the position with each strong body candle. That's KIN. That's today. Next, let's go to solo. This is solo. Damn near the same chart. Okay, 9:30. It pops, but then it drops. 220 is tight. So you're watching it. It comes around. The 20 comes above the 200. Then guess what? It's not a lot of volume. And finally, the volume comes in right here. This is one, a ton of volume, strong body, 420, 430. I might want to take it now. I'm in. Squeezes up to 440, 450. Creates a top wick, I might want to get out now. That would have scared me. And I would actually take it all off right here. And it rejects a little bit, but then it bounces right off the what? 20 period moving average. It keeps cooking with more volume coming in all the way up to 470. Now, this price movement is not aggressive for me, but it's still following the same rule. Rapid change in price off the 220. A strong elephant candles indicating the trend, staying above the 20, and it actually keeps moving. These are rules we need to follow. And then when do we need to get out? When it's getting near back to the 20. Either we're locking in profits half or 75% or the whole thing, or you can hold half and maybe stop out if it takes out this zone off the 420, or see if it bounces off the 200, off the 20 and makes a higher high. And it does. And you would have took profit up here for the next leg up. So this is a strong leg. But let's turn this into the 15-minute. See, the 15-minute shows it clearer. Here it is. So in the 15-minute, the volume come in, it doesn't reverse back above the 20 until 10:15. So 10:15 at 420 again, no pun intended, 420. But you would have been entered that stock because it's rising above the 20 period moving average. And now you get a strong candle move straight up to 450 from 420. And that's 30 points. That's good. All right, that's 15-minute candle though. So this shakes out and it doesn't break this candle though, the previous zone to stop out. So you could have took half up here and then you could let it ride. You let the rest ride. Let me see what this does. And then you can take the rest because this one tops off. Then this candle starting to take out this candle. So let me take off the rest. I'm not gonna get no more money on this. I'm out. Versus let me hang out. I want to go $5. It's going to $5. This is what we tell ourselves. The stock's going to $5. Instead of looking at these chart patterns and memorizing them, draw these shits, have it next to you. Yo, I'm gonna trade this shit like this. I'm looking for a tight 20 and 200. I'm looking for a rapid change in price. I'm looking for a strong volume coming in and showing me it's gonna ride above the 20 so I can take a long position. Or I'm looking for when the shorts probably come in and the stock runs out of momentum and it's gonna start coming back down to the 20 and I should stop out. Let me take my profit all off the table and be done. That trade is over. Tomorrow's another day. And looking for this indication that the trade is over. And it consolidates on the 20 line. Probably might continue tomorrow, who knows? All right, that's solo, S-O-L-O. All right, we wanna wrap this up real soon. This is TEL. We almost over with this one. Okay, here we are. Look at this, same recipe. This is at 7 in the morning though, okay, TEL. So TEL is intersecting the 220 and it has a strong rapid price change from what, 446 straight up to $5, all right, more than 50 cents. And guess what? It continues at 8 o'clock. More volume comes in. $5 flies up to 580, and then it chops around, but then it squeezes up to 6. And then guess what? At the bell, guess what happens? Because this is away from the 200 and away from the 20. And guess what? It chops around. A bunch of red volume comes in at the bell. Okay, it dumps from 574 to 535. I'm looking to get short. I would have got short here, 535. And guess what? By 1030, it goes to 501. I'm taking profit. It goes below the 20 period moving average, but it reclaims. That means at 520, I got to run. Let me get off this stock. And usually I'll be stubborn and hold this, but I'm looking to take most profit because this candle's taking out this candle. This green candle takes out this red. I got to stop out. I got to protect the profits, even though it chops around and dips around and then finally makes a lower move back to 5. It's not safe. Let me just get off based on green taking out red or red taking out green, previous zone. So here's a good entry from off the pre-market. This candle rejecting, taking out this candle zone. This is the previous low zone. I'm in 560. Or you could take it at 540. Then the bell rings, you get what you want, $5, a little under, 40, 50 cent move, that's good profit. And that's TELL. All right, next, PYR. What did this do? PYR, a quick move. Nobody would have seen this probably. Not enough volume, I wouldn't have traded this. BB, let's look at this, BlackBerry. Same thing, meme stock. It's getting going, it's getting going, it's getting going, breaks below the 20. Getting going, back above, breaks below. Back above the 20, get going. Get going, breaks below the 20. Back above the 20, get going. Now let's look at today's session. It's been going for 3 days. This is a meme stock, right? It's heavily shorted. People are going after it. People believe in it. Guess what? Shit pops up to 21. It's doing the same thing that AMC was doing. It rejects at 5 in the morning, up at $20. Okay, remember that spot, $20, all right? That's the spot, that's the location. Matter of fact, let's do a horizontal line. Horizontal line at 20, boom. Guess what happens? It fades, goes under the 20 period moving average. That's at 7:30 in the morning. All right, I'm watching it for a short setup. Guess what happens? Here's 9:30, this is 9:30. It stalls at 9:30, pops up to 20, immediately gets rejected, tall body wick. Here comes the red volume, a shitload of it. Okay, a shit ton. This is 65 million shares in fucking 15 minutes going down. So here I'm looking for the short. I'm looking for resistance at 20. Guess what happens? 9:30, it stalls out and it starts to make the red move. I would have seen this volume coming in. Let's just say I got in at 19 or 18. It flies down to where? 16 in 15 minutes. That's good money. I can leave, or I could take profit most and hold on to the rest for the day. And it doesn't, and it tests the 20 and gets rejected. The 20 becomes the new resistance zone overhead for supply, and it makes a lower move down to 14. I could cover down there because why? It's back to the 200 period moving average. And what happens when it hits the 200 moving average period? It boing, it bounces off and claims back to the 20. Simple, Simon. Okay? Simple, but hard to follow because we're not trained to look for these signals that these machines set up every day. In the location of where we put the short, how we technically set up for the short, and where do we enter that short, and how do we get long? You know, when it's bouncing off, here's a reversal off the 200 moving period average, and we can go long here, 15. It bounced and broke the zone, 15, get long, all the way up to 17, get off. 15 to 17, that's great coin, $2 off of a technical setup that you could have traded all day. Then it actually stalled out. Here's a couple of wicks. This candle takes out this candle. Let's get short, 17 or 1680. It dips 1594, a whole dollar. Another dollar move in 15 minutes. These are technical setups that we can use all day, and we should be all right. All right, let's go to U1. We're about to wrap it up. U1 has been running for a few days. All right, they're getting some McDonald's play or investments. Here we go, intersecting lines above the 20. Above the 20, here we go, yesterday, rapid change in price. Okay, right here, 960 to 1060, a dollar move, that fast, get long. Bouncing off what? The 20. So get long right here, 1060, 1150, 1250. That's a matter of 45 minutes. Get out, consolidation, leave. Here's a reversal right here, 1201. This stalls out, consolidation. This candle takes out this zone. Get short, $12, flies down to $11, leave. Why? Because it hits the 20 period moving average and consolidates. Leave. Here's today's session. Under the 20. Okay. Under the 20. Find the 930 bell right here. It rings. It goes what? From 11 to 1035. Short. All the way down to the test of 10. That's a whole dollar move in 45 minutes. Oh, no, in 10 minutes. Yeah, 45 minutes and you're in 30 minutes and you're done. It's actually, you know, so it settles down, no more volume. And then that's it, you leave. Here you got a strong body change in price. Going back above the 20. Guess what happens? You get in at $10, $11, $11.50, $12. Actually, you take half, see what the rest does. And it stalls out up here at $13. You could take it at $12.50, cover the whole trade, and you're done. and that's technical setup. And it bounces again off the 20 again. And this is U1, UONE. All right, technical. AHT. This has been going for a little bit. Same deal. AHT been getting moving just like the meme stocks. So what's been happening in a few days? Cooking above the 20, above the 20, above the 20, above the 20. Breaks below, claims back the next day, above the 20. Rapid change in price, $4.50 to $5, $4 to $5. It's been topping out. Guess what happens? Same thing. Pre-market, 5 in the morning, breaks back below the 20. All right, let's get to the bell. 9:30, pops up, hits $6, resistance zone, test when it broke below the 20. Looking for a short setup at 6 or 5.50. This is the bell. That is the bell, yep. And then I'm short. 575, dips quickly down to 520, cover fast. It claims back, hits the 20, breaks above, but then it breaks back down. It tests 6 again. I would have went short again. And it breaks below. Once it breaks below the 20, I'm confident. Confident to keep the trade as long as it trends below the 20 period. And it dips all the way down to 518, hits the 200, and what? It bounces and consolidates, and that's the end of your trade. Leave, go home. Long trade, nope, it's a short trade. That's what it is. But it was long for a couple of days, as long as it was above the 20. Okay, here's ears. EARS. Find the 9:30 bell. Here it is. 390. Straight up to 425. Continuation, 425. Straight up to 450. Not a lot of volume coming in. Don't like that. This red candle would have spooked me. If I took the trade, I stop out. It immediately goes back after the 20 and breaks down all the way to the 200. So here's a reversal of a 5-minute chart right here. You could take your short here, or you can anticipate here, because why? The pre-market, it went to this price zone and got rejected. So let's look at that. That's why you always got to look left. Look left, look at that, verbatim. This is what it did in the pre-market, and damn near identical. The two candlesticks are rejecting off that same point, and it makes the lower move. So I would have been anticipating that, saying I'm short here, and it breaks to the 20, 390, 440 or 450, all the way back down to 3. What more do you want? That's a short setup. All right, back to the 200 and back to the 20. Ears. SNES. This broke out late in the evening after market. All right. SNES. Strong rapid change in price. 210 flies up to 250. If you're in the aftermarket, get long. But not for long. Usually they don't keep continuing. 250, 270, squeezes up to 280, 290, stalls out. It's above where? The 200 and the 20. Good long trade right there in the aftermarket. In case you want to get a little more points on the board, that's a 15-minute interval. Simple, Simon. You seeing the recipe, right, guys? Everybody seeing the recipe? Everybody's going to sleep. Okay.
Nah, I see it. I'm here with you.
This is why we need
I
the right
see it. I see it.
Still here.
We need the right tools. This is the hardest part, the practice. What is your practice? We always go to the market trying to make money, but our practice should be, how can I make a good, smart trade? And what am I looking for? I'm looking for something with a good location that gives me good signals to get long or get short, if you can get short. And this is what we are not raised with practicing how to do, is how do we pick our trades, and how do we pick our entries and our exits? We need to have these tactics down to a rule set. You just want to create these rules. You want to have it written down. This is what I'm going to do today. This is what I'm looking for today. You want to have your engagement rules, your rules of engagement. When do I use this weaponry? Other than that, if you don't see these type of conditions, you don't do shit. You just wait, because you don't want to think, oh man, what's happening? It's going to go to this price. Oh, no, it ain't doing that. Let's just let the charts and the candlesticks tell us what to do. Oh, damn, that was a strong body candle. That might want to get long. Let me use small, let me start with 100 shares. Oh, I'm trying to make a lot of money today. Nah, I need to make some bread today. 500 shares, yo, 1,000 shares. And I'm a victim to this. I'm talking to myself. I'll put on 1,000 shares and I'm trying to make this price. And I forget about reading the 200. I'll forget about reading the 20. I'll forget about reading the candlesticks. How far are they away? Are they close or are they far? Is this candle taking out a previous candle? Should I get out and stop out? I'll forget all of that stuff. And I just got this price locked in my head and it causes me to fail. So instead of using, all of these tickers are from today and you can see the exact same setup in the moving average in the indication. Now, this is not a guarantee. That's why we got to stop out fast. But all of the tickers that we've seen today are doing the exact same thing. This is ATOS. I don't even like ATOS anymore, but the same thing. Close 200, close 20. At the bell, 9:30, volume comes in. Not a lot of strong volume, rapid change in price, but we do have a zone where it's breaking above the 20 and it's pushing. It does 20 cents, it does 40 cents. All right, I could take that. Finally, it catches a rejection candle and I'm out of there if I wanted to take it. But that's not my price point, or, you know, that's not my, I don't like the way ATOS moves, the way it trades. I wanted something a little more aggressive. So I'll look for something better than that. Any questions? Anybody got any questions? Anybody got anything they want to bring up? But I think that's a wrap here. I just wanted to go over simple 220 period moving averages on a clean chart. Watch the volume, watch the body of the candle and how it changes, and what's the location. Is it above the 200 and the 20? What direction is the trend with the 20? And should I get long? Can I get short here? Let me start with a small size, one lot, and see what it does, and be consistent. Oh, this in 3 candles it went up this much, and it's starting to cool off. Let me take profit or take half, or take the whole thing. This looks good. And no over trading. I'm not looking for another trade. Tomorrow's another day. Let me look for the same exact strategy. If it doesn't work immediately and start working for me, stop out. Tomorrow's another day. Don't overtrade. That's another thing I have a problem with. I'll make money and then I'll overtrade and then I wind up giving it back because I'm trying to make more money versus where's my technical setups? How long can I stay in them? Let me watch the chart versus watching the P&L. That's about it. That's today's Musclehead recap of today's session of covering long day trade setups and short apex reversal setups for profit taking measures for both strategies. And I hope this enhances everybody's trading ability, and we got to practice and write these rules down. Ask yourself these questions. Where's the 20? Where's the 200? What direction is the trend of the chart? What location? Are they close together? Can I take a position here and it has more room to go, whether up or down? And where should I be looking to take profits? Have it in your head. Where should I be looking to stop out in case it doesn't work? Have it in your head. Keep the stops close. You know, maybe 30 cent, 20 cent, 10 cent even, relative to the price of the ticker, and have that plan down and trade the chart, trade the volume, trade the trend, trade the moving averages, because they definitely are in effect. They definitely have power and effect on how these algorithms are driving these tickers, because most of these tickers that we're trading are algorithms that steal money from all of us. They're not stealing it from Warren Buffett, because he ain't here in day trading. You got some short setup losers as well. Let's look at KOSS, last one. Oh, we looked at KOSS, right? Yeah, we did.
Look at KOSS, yes.
All right, say no more. We're done. We're done. We got enough examples tonight. All right. Thank you, everybody, for coming. I hope we can all keep building. And that's about it. I just noticed this, and I said, let me share this. This is going to be recorded and also put on YouTube, and so you guys can review it and you have it for your records.
Could he block out the part when I kind of dozed off?
No, we didn't see that.
Okay, cool.
All right. Well, thank you, big bro. Appreciate the time, Aji.
You're welcome. You're welcome. All right, boys and girls.
Thank you very much for your time and your efforts. I'll see you in the morning. We'll do this all over again.
Yes, sir. I see you, gentlemen. Money Ali, Juice, appreciate y'all.
All right.
You already know. I'll see y'all in the morning.
Back in the morning. I'm tired. That rum punch hit me in the head.